Welcome back to Finweek Money Matters. Now, trading can be somewhat tricky as you need to know your market. Finweek, in partnership with IG South Africa, recently hosted a trading trivia, and this was an event focusing on the opportunities and challenges facing the trading industry. Let's take a look.
The trading trivia event was held at the Venue Green Park in Johannesburg. The event was a quiz-style evening where high-profile traders shared their trading experiences and the qualities one needs to be an excellent trader. Among the panelists was Simon Brown, a Finweek contributor, entrepreneur, trader, and founder of Just One Lab. He shared his experiences and insights on derivatives.
So my remit this evening was to do something about 5 years of derivative history, going back to 2008, and I thought 2008 was significantly not far enough back. I thought the South Sea bubble was probably a little too far back in sense. So I thought I'd do it in what I was doing, but particularly with trading and life, and go back to my trading history. I inherited some shares in the 80s. I started trading in the markets in about 95, simply because I discovered this thing called the internet. I had a stockbroker who had an online brokerage. What that meant was they had email. The problem was that the broker went to leave for 6 weeks and no one answered the email. The bigger problem was it was my most successful 6 weeks of trading because he ignored every buy signal I gave him. Then, October 1997, an amazing thing happened in my life. Warrants arrived on the scene. Ultimately, they're options, but in the retail space, they're called warrants. A friend of mine in Munich who traded warrants, and he said, this is the best thing ever, trade warrants. It didn't click in my head that if I was losing money trading shares, if I moved to gearing, I would probably just lose money faster. Anyway, Deutsche Bank arrives in 1997, October. They've got some warrants. They've got 3. They've got one on Nedbank. I can't possibly buy that one because I bank with Nedbank and they screw me on the fees. I've got one on SAB Miller. I can't possibly buy that one because, well, I just sold my SAB Miller shares and the damn stock had carried on going up. So I had to buy the third one, which was Sasol. But I had an inkling that I should have a reason behind the buying of the Sasol warrant. I shouldn't just randomly do it. And I had this wonderful thing called the internet. We were on dial-up. 9600 modems were the exciting thing those days. The young kids have no idea what I'm talking about. That's cool. So I need to prove that Sasol's a really, really good thing to buy with the warrant. So off I boogie and I go and find this amazing website. The European weather thingy-majig long-term weather forecasts. And they tell me that there's going to be an especially cold winter in Europe. To which my logic is perfect. If there's going to be a cold winter, it means people are going to be using more heating oil, means the price of oil will go up, which means Sasol will go up. I'm so chuffed with this amazing fact, I call my wife in, I point out to her, how are we going to make so much money? We are going to pay our house off 7 times by the weekend. It's currently Thursday, I'm ambitious. She of course says, but hang on a moment. If it's going to be a cold winter, people will be driving less because there's ice on the road and it's cold and they're staying at home. So they'll be using less petrol, therefore less oil, therefore the price of oil will go down, as will Sasol. I told her she'd do nothing. I bought my Sasol warrant, and that was my first 100% wipeout. The key beauty of warrants is that your risk was limited to 100%. You could only lose everything. No, that's the big thing. These days, you can lose everything plus some more. You can lose everything else. The wife, the kids, the dogs, the whatever you got, you can lose the whole shindig. Anyway, so I bought a Sasol warrant. All went horribly wrong. And warrants became, understand, SAFEX as an institution only came along in, I think it was May of 1987, just before the crash. And that wasn't even SAFEX. I mean, SAFEX itself came along in the early 90s. JC bought them in the early 2000s. There was no derivative products for private clients. There was nothing. So warrants suddenly became this absolute explosion. Everyone was trading them. Deutsche Bank were first. By the time 2000 came along, we had Standard Bank, we had ABSA, we had Nedbank, we had Investec, we had UBS, we had Gensec, we had SocGen. Heck, the foreigners were even coming into our markets.
Moshi Magama is a consultant to the trading desk of the largest banks and is recognized as one of the leading technical analysts in South Africa. She shared some of her dark days in the trading industry and the lessons she's learned.
I actually prayed for resources even when I prayed for food. when you are at home, you know you need to go out. The trend is your friend. And if it is going against you, don't try a big contrarian because you could be 27% loss contrarian. And that's not cool. Admit when your pattern has not gone in the direction you want to fulfill your targets. You could be cool telling your friends it's time to get in. It's also time to get out when the pattern's fading. Never look at the price chart only is one thing I learned. You need to get a leading oscillator to help you determine when the trend is going to turn, which is something I did not do. And lastly, you must get over any losses you've made, but not a 27-1 once you've looked at your portfolio, well, the trend and whether it's turning. Trading is meant to be fun. So that is my lessons in trading and technical analysis based on that, because I have not really traded per se, but I've given quite good advice that this was one of my bad advices. But today I'm going to use this advice.
Weighing up rewards and risks is a critical part of a trader's skill, something trading houses are very cognizant of.
We take risk management very seriously, and we're trying to give as many tools as possible to allow our clients to manage their risk appropriately. We do that by educating them, by providing seminars, webinars and literature. We also do that by providing them with actual tools in order to manage their risk. This would include a trading plan, stop losses and a number of other tools.
A consistent strategy will lead to success.
I think two very, very important, and they're absolutely critical. First is you've got to have a plan. What the plan is perhaps less important, whether you're using an RSI or breakouts, whatever your strategy is, you've got to have that strategy, you've got to have that plan, and then the next, as perhaps even more important component, is that discipline. You've got to stick to the plan. It's easy to say this is what we're going to do, but it's then follow through with it. What is your risk management? What are your stop loss levels? How do you take profit? How do you enter? How do you exit? Position size. Have that plan in place and then stick to it. Whatever happens, no matter what goes wrong or what goes right, stick to that plan. The discipline is what's going to see you through in the end.
One thing that I enjoyed about this was that we actually heard about the failures. We often hear the traders talking about all their great successes, and the thing about this evening, we heard about failures. How important is it to appreciate and learn from your failures?
I think it is. You go to a pub on a Friday night, the whole bunch of traders and brokers, what are they telling you about? They're brilliant trades. And for trading is about probably losing money 40, 50, 60% of the time, but overall making money because your winners are bigger. And if you're sitting there and you've got like a 50-50 win-loss ratio, everyone's talking about their winning trades, you start to feel like the mug in the room. I think it's really great to see people we know, people we respect, top traders, Mishima, Garth, stand up and say, you know what, here are the times when I got it not just wrong, I got it horribly wrong. What do I take away from it? It makes the whole thing real. It makes them more real. It makes them more tangible. And I think it brings trading to what it is. Trading is about sometimes you lose, sometimes you win. Overall, you want to be a winner.
For the audience, a mix of novice and experienced traders, it was a successful evening, gleaning insights from the industry experts.
Mark, obviously seems like a fantastic event that you had there. How are you planning to grow it?
Yeah, look, I mean, so one of the things, maybe just taking a step back, you know, when we started out, it's very tough to find an audience to understand, and I think that trading is a very niche skill in South Africa. Actually, we saw stats the other day. I think there are about 120,000 retail investors in South Africa. To put that in perspective, so that's somebody who basically holds a stockbroking account. Put that in perspective, the BE deals in South Africa, MTN Zakhele, Welcome Yazani, which is the Media 24 one, and Sasol, I think have got about 300,000 potential new entrants into that stockbroking market. One of the things that in interacting with the audience quite a lot, particularly on the novice side, they were very keen to ask questions but felt intimidated by it. And I think to the point Kevin Algio made when he was being interviewed there, he was saying, you know, it's about educating the market, it's about having fun. And I think one of the things that South Africa does very, very poorly is actually financial market education, personal finance education. You know, so often we sit there and we talk about, we get death by PowerPoint, and you'll have somebody stand up and give you all of these prezos, but unfortunately you're not really engaged in it from the, it's hard to believe. You know, Garth McKenzie stood up in his presentation, he tells the story of how at 25 years old he had 2 million rand sitting in a trading account, nearly lost it all in a single trade.